on the phone. It's always a pleasure to welcome back to the program David Dayen. Now I believe staff writer for Salon.com. Is that right?
I believe they're calling it contributing writer, so
Well,
I have a once-a-week column there. So,
all right, fair enough.
not on staff, really, but I will be contributing weekly.
Well, as far as I'm concerned, you're now the editor of Salon. Congratulations.
I plan to buy Salon very soon because that's the trend now.
Yes.
So I want to keep up with the Joneses here on the West Coast.
You left coast moguls always
Yes.
looking for a
Looking
hobby
for a media
horse.
product, a viable media product to purchase.
All right. So speaking of viable products, President Obama yesterday was in Phoenix and introduced, or I should say that's happening today, but he was in Phoenix yesterday talking about the administration's second term housing agenda. And he will be today doing a follow-up, a live chat at 1 p.m. moderated by the CEO of Zillow, where you can go on and see what your house is worth or what a house is worth by some algorithm, which I don't quite follow. But be that as it may, before we get into the 20 questions that you would like President Obama to be asked today, tell us what he's outlined in terms of replacing Fannie Mae and Freddie Mac. And before you even do that, tell people what Fannie Mae and Freddie Mac are and what they do.
Right. So there are two mortgage markets, basically. There's the primary mortgage market, and that's where a homeowner goes in, or a prospective homeowner goes in, wants to buy a house, gets a mortgage from a lender, and agrees to pay a monthly payment, and if they default on that payment, the house gets repossessed. That's the primary mortgage market. There's a secondary mortgage market where the lenders then sell those loans, and in recent years, it's almost entirely sell those loans to Fannie Mae and Freddie Mac, who then repackage all those loans into securities, into bonds, that they then sell on the open market.
And that's sort of a tertiary market, if you will, right? I mean, the securitization of these loans is sort of the third market.
Yeah, I mean, there's a securitization market. Yeah, I mean, if you want to call it three markets, the secondary market generally refers to this securitization market, that these loans are purchased, packaged, and sold back out into the market. And the reason for this is to create the capital, because that money that is paid for these bonds is then plowed back into the selling of more loans. So the idea, in theory, is that we need this secondary market because banks won't just hold your loan for 30 years. There's interest rate risk there that they're selling it at a 4% interest rate. If interest rates go up, then they're losing money. Essentially, they're losing opportunity costs, but that in their theory, that's losing money. And so we wouldn't have the large home ownership rates we have in this theory if we didn't have this secondary market that created a lot of liquidity, a lot of capital that could be used to sell more loans.
Now,
so that's the idea.
Now, we should say that prior to the housing crisis, Fannie Mae and Freddie Mac bought up about 40% of the loans. It's now up close to about 85%, is my understanding.
Right. There used to be a private securitization market that mainly dealt in the subprime sector and would package these loans and send them out, but it was the most hopelessly corrupt market in 80 years. I mean, it lied about the quality of the loans in the pool. Sometimes it put the same loan into 2 or 3 different pools. It would, through the servicing sector, it would do things that were not in the best interest of the investor, because the investor would get the security, then they would hire this company, a servicer, to service the loan, take the monthly payment, and distribute it to the investors. Well, the servicer was ripping off the investor as well by foreclosing when a modification would have been more profitable for the investor, by just lying and saying they were still servicing certain loans when they weren't anymore. the loans that were sold off, hiding the losses on loans and still collecting the servicing fees. So there are about 20 different ways that investors in private label securities were being ripped off. And that's why they just pulled out of the private label markets and they rode to the safety of Fannie and Freddie, where they would get a government guarantee, basically an implicit guarantee that they would not lose money on this buying these mortgage-backed securities from Fannie and Freddie.
And so now we should say that this was one of the big roots of the financial crisis.
The big root. I mean, the number one reason why we had a financial crisis was the explosion in private label mortgage-backed securities, and that built up a very unsustainable housing bubble. And when it crashed, these securities and derivatives based off the securities, collateralized debt obligations and things like that, just accelerated the financial crisis by magnifying the impact of the collapse of the housing bubble.
Now, and just to touch on one of the right's favorite zombie lies, Fannie and Freddie, we said, had only about 40% of that market, and they entered that market after the private label securitization had already sort of taken off in the early 2000s.
Particularly in the case of subprime, they entered very, very late in the game, tried to catch up, in a market share capacity. But they did not cause the crisis, nor did the Community Reinvestment Act cause the crisis. You only have to look to the fact that other countries had housing bubbles and didn't have Fannie and Freddie involved, but did have a private label securitization machine to know that this was the proximate cause of the crisis.
Now, ostensibly, the fact that Fannie and Freddie hold 87% of those loans on the secondary market also is indicative of the fact that those loans are of a better quality because apparently they have tighter controls. Is that also what we're?
Yeah, I mean, in the wake of the crisis, there were tighter lending standards put into place. Fannie and Freddie have the ability to say that they're not going to buy certain loans. And so that creates sort of a cascade through the system, and originators have been a little more circumspect in terms of giving out loans. But, of course, everybody in Washington says, oh, my God, Fannie and Freddie own 80%, 7% of the market. We got to get rid of them. We have to get rid of them. We have to put private capital back in the center of mortgage finance. And that was the point of Obama's speech yesterday. And my question is, why would private finance want to be back in the center when they were abused horrifically when they were in the center of mortgage finance in 2006 and 2007?
Okay, now let me ask you this. What is the problem with Fannie and Freddie holding 85% of those loans?
There is a somewhat legitimate problem, potentially, in that if Fannie and Freddie lower their lending standards, if there's a recession, if there's a crisis, if they take losses on the loans, then the government guarantee kicks in and taxpayer money is at risk.
Okay.
I mean, so there is an issue there with Fannie and Freddie owning or guaranteeing basically the entire mortgage market. The way around that, in my view, is to create situations where lenders retain more of the risk of loans, number one. And number two, create options so that people aren't psychologically led into believing that they have to own a home in order to be a real American, and create opportunities for rental, which is much more stable, or at least can be, and you can actually create stability and community aspects if you would do it in a proper way. So there are ways around that. The exact way not to deal with the potential risk of taxpayer money in Fannie and Freddie, is to recreate the private securitization machine and expect it to work better somehow the next time around.
Right. Well, that's the point. I mean, we all of the bailouts that we were liable for, or that our government extended, were a function of where it seems we want to return to, according to what I'm hearing.
Yeah, I mean, in a large sense. Now, first of all, I just don't believe that investors have any interest in going back into private label mortgage-backed securities. I just don't. I don't see why they would. If you were told, remember that company that totally ripped you off? They want your money again. And by the way, this time there's no government guarantee for it, so you're liable for the losses, and forget about it. Why would they want to go back into such a market? So that's my biggest problem is I don't think that any of this would work. The only way it would work is if you give enough of a subsidy to the buy side in order to induce them to buy mortgage-backed securities. And at that point, you have just Fannie and Freddie with names that are not called Fannie and Freddie. You're continuing to advance a subsidy for mortgage-backed securities. You're just not doing it under the auspices of this government-sponsored enterprise. You're doing it under the auspices of something else, whether it's subsidizing private mortgage insurance that these buyers of mortgage-backed securities could buy, or subsidizing it in some other fashion. And the question really has to go back to the beginning. But is this the best use of taxpayer dollars to do this kind of subsidy? Is it a good use of taxpayer dollars to include this massive mortgage interest deduction that it costs, I think, $1 trillion a year, and that subsidizes home ownership? Do we really need home ownership at the levels that we have it right now, so that we have to massively subsidize people so they can create a market to encourage home ownership? I just don't agree with the premise.
What has traditionally been, I mean, I understand it's the American dream, right? We got the white picket fence, we get the dog, we get the two kids. In
many ways, what you just described is the problem. Like the idea that this has been beat into the heads of Americans collectively, that they're not a real, true American if they live in an apartment in a city, or if they live they don't live the dream that you just described, that they're somehow inadequate. I mean, this is the problem, and it creates these massive distortions in subsidies, which ultimately go to elites, banking interests, and the upper middle class, and it transfers wealth upwards.
We should also say that a part of this, that it's the white picket fence thing, but it's also the notion of, having been in my early 40s, late 30s, watching the sort of the valuation of real estate skyrocket. There's still this sort of residual feeling of like, I'm going to miss the boat. This is the best investment out there. And that even though we had a little hiccup for a couple of years, the boat is leaving. I mean, I'll tell you something. In New York City, anyways, right now, rents are going through the roof, and apartment sales of apartments have increased by, I don't know, like 15, 20% over the past year or something in terms of valuations. And now New York is, I think, fundamentally different than the rest of the country, but there has to also still be that residual of like, if I don't buy a house now in 30 years, I'm going to have missed out on all this new money that it would have been accrued.
Right. So we're encouraging individuals to throw all of their savings into this highly, highly volatile asset that is no less volatile than something like a .com stock in many ways. I mean, if you look at the bubble and the crash, it's basically the same dynamic. Out here in Los Angeles, the largest year-over-year increase in housing prices during the housing bubble was about 25% year over year. Mm-hmm. In June of this year, the year-over-year increase was 28%. So, we're going back down that road again. And there has to be somebody that says, we don't need to recreate this market. We don't actually need to create the only savings vehicle for large numbers of Americans to be this risky asset that you have to subsidize in all these kind of discrete ways in order to continue to generate at great risk to the economy, as we just saw 5 years ago. So it's really a large ship you have to sort of turn around here to get to that point, but we have to get to that point.
And so by getting rid of Fannie Mae and Freddie Mac, at least in terms of it being an entity that is backstopped by the government, guaranteed by the government, are we heading in that right direction? I mean, because theoretically,
well, I mean,
this is question 19 that you want to ask President Obama. Why would private investors go back into that securities market? Which theoretically, the implications of that are if they don't, then there's no capital for further loans, which would theoretically diminish the amount of loans given to buy houses, and then we would sort of de facto achieve that goal of discouraging home ownership, right? I mean, so why is that not a good thing?
I mean, potentially, but my suspicion is that there will just be large subsidies that will be granted to recreate this market. The thinking in Washington is we have to have this secondary market. We have to have a situation where we're creating large amounts of money that can be plowed into loans and increase the rates of home ownership. Incidentally, we've been talking about this housing recovery for the last year. The home ownership rate has actually dropped over the last year and a half, while prices have gone up and sales have gone up, although a lot of those sales are to investors that don't actually live in the home. So the situation is that I just don't have any faith that there's a fundamental rethink of this whole notion of home ownership, although to his credit, Obama did name-check affordable rental housing yesterday in his speech. I just don't have much faith that there's this fundamental rethink going on, more than we're going to get to this secondary market by any means necessary. Okay. So, yes, restructuring Fannie and Freddie so that there's not this kind of bubble mentality going on, I guess that's okay, but unless it's accompanied by these real changes where you get banks retaining more risk, where you get, instead of putting that risk out onto the market where it can't be priced well, where you get real options for rental affordability, it all goes in a piece with one another. You can't just say, let's get rid of Fannie and Freddie and hope that the worse the better, that shocks a system into stopping the mortgage machine.
All right, we got 2 minutes left here because I know you got to go. You got to do a different show because you're a busy man. I understand these left coast media moguls. All right, so on one hand, let me just get the sort of the politics. On one hand, we have a lot of pressure to essentially divest the U.S. government of its liability through Fannie and Freddie Mac. Who is also pushing, and your fear is that if we do that without a comprehensive plan, we're going to end up subsidizing that secondary market by some other means that is going to have us have just as much liability, but it's going to allow for more irresponsibility in that market, and we're going to get right back. Is that right?
By the way, you'd be transferring the risk, or transferring this guarantee, I should say, from Fannie and Freddie, or at least nominally government-sponsored enterprises, into the sell side of these securities, which are the banks, who are now profiting wildly, because Fannie and Freddie are profiting wildly now. That's what happens when you have a monopoly. The largest banks, who would probably monopolize the mortgage-backed securities market, armed with this guarantee, if they subsidize the product enough so that people would actually buy it, would then profit massively from essentially a taxpayer guarantee.
So that's the agenda.
Why do we want that?
That's the agenda that's really pushing on this, right? That's
Absolutely.
The countervailing force.
Absolutely.
All right.
I mean, the House Republican bill, which is even to the right of what Obama and the bipartisan Senate bill, which is Bob Corker and Mark Warner have been putting together, has no role for the government whatsoever. And just sort of leaves this off to the devices of the market. and yet there is this, secondary attachment here that by virtue of insuring this market, you would create this guarantee that would get transferred to the largest banks in America, and they would create massive profits for themselves.
So it's basically the idea is let's blow the bubble up again, and then we'll cover the losses at that point without any means in which to make sure that these loans are not like they were 7 years ago.
It's very problematic, but I have to say I will make a pitch for people to read over at Salon my story with these 20 questions for Obama on housing, because only one of them deals with this issue of Fannie and Freddie, and most of them deal with the fact that we still have a foreclosure crisis in many parts of this country. We still have a situation where banks are foreclosing on people with false documents. We have a situation where they're ripping off homeowners through their servicing departments, that they're lying about whether or not they got records for a loan modification. They're pushing people into foreclosure. Virtually nothing has changed in terms of the abuses and the fraud that has gone on in this market for the last several years, despite the fact that we have all these settlements that were supposed to end the conduct. And so a great number of my questions I get at this very point, that they're and the fact that criminal behavior is usually deterred by prison time, and we've seen absolutely none of that. And why isn't there a push to open new cases if we're seeing the exact same conduct for which there were these large settlements that were put upon the banks? So I urge people to read that, and it's not just that. It's pretty comprehensive in terms of all aspects of the housing market and housing policy. But they're questions that need to be answered. I'm not sure they will be today, but they need to be.
Well, if you had more time, we would go through all those. That was my plan, but I only got stuck on 19. But I know you got to run. David Dayen, thank you so much for your time today. We will link to those 20 questions, and people should ask them if you can get on that live chat. Pick a question of David's and ask it.
Actually, in the next half hour. It's happening in a half hour. So if you flood the zone on Twitter with the Ask Obama Housing hashtag and start asking some of these questions, maybe we can create enough pressure.
No kidding. I mean, how many people are going to be using that hashtag anyways?
No idea.
All right.
So give it a shot.
David Dayen, thanks so much. I appreciate the time, buddy.